Does your family ever get exasperated with you for stockpiling such things as paper towels, bottled water, or toilet tissue? Well, they certainly can't object to you stockpiling money. Silver, the only money recognized by the U.S. Constitution. And your first 10-ounce bar of pure silver can be had at spot price with no premium by going to sdbullion.com/RP. And when you buy it that way, you'll be supporting Reluctant Preppers as well by going to sdbullion.com/RP. Thanks. This is a quick update to thank you for building our number of patrons to 76 and growing on patreon.com/reluctantpreppers. Soon, when we reach 100 active patrons, we're going to start sending out a 1-ounce U.S. Silver Eagle each and every month to one active subscriber, so you don't want to miss out on that.
Please help us grow by subscribing today at patreon.com/reluctantpreppers.
As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Welcome back, Reluctant Preppers. We're very glad to have this returning guest today. Ted Butler, the founder of Butler Research, is one of the most widely followed analysts on the gold and silver markets. He's been a widely respected voice for decades in the area of silver analysis. He's here with us again on Reluctant Preppers to talk about his recently penned article, What Disconnect Between Physical Demand and the Actual Spot Price of Silver, and the lack of any kind of coordination towards legal restrictions on that by the powers that be, but instead what appears to be coordinated ignoring of it by the powers that be. Ted, thanks for joining us again here on Reluctant Preppers.
Hey, thank you, Dunnigan. Pleasure to be here.
When we had you on last time, and that was the first visit ever for you here, you talked to us about the next silver rally will be different from anything else in history, and about how JP Morgan, unlike in the past where they've always had to beat down any kind of fledgling breakouts in the price of silver that have arisen organically because of speculative interest or intrinsic fundamental demand, that sort of thing, has reversed its historical position and instead amassed a significant amount of physical silver. If you could update us first on what evidence we have for that, and then we'll talk more about the dynamics of how that might affect the performance of the silver market going forward, and also about this whole history of price suppression by paper traders, and the fact of a blind eye being turned to that to regulators. So could you first talk to us about what do we know about JP Morgan's actual position in the silver market?
Okay, well, we spoke about 6 weeks ago, towards the middle of August. I believe silver was around breaking down through the $15 mark, on its way to slightly breaking the $14 mark.
And I should mention, just to confirm what you just said to everyone, this is Sunday, September 30th, 2018. Go ahead.
Good. Anyway, back then I claimed that up to that point JP Morgan had amassed over the last 7.5 years something on the order of 750 million ounces, 750 million ounces of silver, all while holding a very large paper short position on the COMEX. They've always traditionally been, for the last 10 years, the largest paper short in silver futures contracts. In the last 6 weeks, I mean, they're still showing, JP Morgan is still showing an inclination for accumulating physical silver. I would point to the recently completed September futures contract in which JP Morgan, in their own house name, was the largest stopper taker of futures contracts, to the tune of about 11 million ounces, 10.5, 11 million ounces in the September delivery. So that hadn't occurred the last time we talked. So they picked up another close to 11 million ounces in COMEX deliveries. Plus they've been picking up large quantities, I'd say about the same amount, 10 million ounces or so, via conversions of shares into metal in the big SLV ETF that they are the custodian of. They don't own a lot of the metal in the silver ETF SLV. There's like 330 million ounces there. It's the largest stockpile of silver on the earth. And even though they're the custodian, they can't own more than 5% of the metal and shares in that SLV because they'd have to report it to the SEC as a large trader. And what they do to avoid that 5% threshold is to convert their shares that they buy in the open market into metal, which becomes unreportable. So first, to answer your question, I'd say they picked up, I'm saying 750 million ounces. I probably should say 775 million ounces in the interim in the last 6 weeks based upon the COMEX deliveries and the conversions in the SLV. They picked up at least 20 to 25 million ounces more of physical silver at what you're aware of is very rock bottom prices. At the same time that JP Morgan has picked up this amount of physical silver on those two forms, COMEX deliveries and SLV conversions, they have done an even more remarkable job of buying back short positions, the paper short positions in the futures contract, in the futures market, the COMEX. When we talked, I had pegged them around at a low figure to be 20,000 contracts net short in COMEX silver, down from 40,000 contracts as recently as the beginning of June. And that was pretty big. 20,000 contracts is the equivalent of 100 million ounces. There's 5,000 ounces in a contract. So when they were short in June as much as 40,000 contracts or 200 million ounces in paper contracts, they whittled that down to 20,000 or 100 million ounces when we talked by mid-August. Since then, they have bought back the entire 20,000 contract short position. So they bought back another 100 million ounces since we talked in paper silver. And now they are flat, even a few thousand contracts, 2,000 or 3,000 contracts net long for the first time in history, first time since they took over Bear Stearns back in March of 2008. So in the interim, since we talked, they have picked up another 25 million ounces of physical silver. They have bought back another 100 million ounces of paper silver. They're no longer short at all, and it's like, and they did it all as prices would indicate on the lower prices, the lowest prices we've seen in a number of years in silver. So you kind of scratch your head. How are these guys able to buy so much silver, okay, on declining prices? And
right.
They're just magicians.
Yeah, that's exactly what comes to mind. Is if you're going to try to cover, that's always what people talk about is like short sellers on the stock market. You know, if once, oh boy, we're going to get a short squeeze. Once they have to cover their positions, there's going to be a squeeze. So how can they buy back so many? Sounds like 40,000 contracts of paper short without in a market where the paper price is dropping. It seems like reverse gravity or something.
Well, yeah, it seems like magical. I wouldn't use the word magical, perhaps. It seems like manipulative. They both begin with M. The way they do it is how the market functions, how the COMEX functions, and that's namely there has to be a seller for every buyer, a buyer for every seller of every contract, every derivatives contract, and while J.P. Morgan was the big buyer on the way down, there obviously had to be big sellers. And we know from Commodity Futures Trading Commission official data that's put out every week in the form of the Commitment of Traders report, we know who those counterparty, in this case, sellers were, who sold all these contracts to J.P. Morgan. And the answer is clear. It's these, what I refer to them as the brain-dead, nitwit technical funds who just follow price change. And when prices go down, they're trend followers, they're momentum traders. When prices go down, they sell. When prices go up, they buy. So in this case, when silver had made a move from June of over $17 down to the recent lows of $14, a $3 drop, the exclusive, and I mean exclusive, sellers on the way down were these brain-dead technical funds. And the way they get hoodwinked and snookered into selling is JP Morgan and the other, we call them commercials, they're just big speculators too, but these other big commercials, they know how to rig prices. They know how just what to do any time of the day. It's a 24-hour trading experience. They know how to entice the technical funds into selling, into going short by constantly lowering prices, reducing their bids, so that the technical funds have to go to these commercial buyers, okay, to complete the transaction, and there's a collusion there. I mean, it's obviously collusion that the technical funds have to be tricked into doing this. They're not doing it in a sense that they're aware of what's going on. They can't possibly be aware of what's going on because nobody would be so stupid and so reckless as to sell hundreds of millions of ounces of silver short, okay, into a price hole, into a price decline. Who in their right mind? Look, if you don't want to buy silver at $14 or $15, okay, don't buy it, go to something else. But why in God's world would you want to go short silver at $14 or $15? It's the stupidest trade I've ever seen. We don't know how long it's going to take before that trade is revealed to be stupid, but in time it will be. It doesn't make sense to go short silver at $14 or $15. And the fact that the technical funds have done it, the only possible reason they could have is because they're trend followers. The price is trending lower, and they're going to sell into it. And it's the biggest con job in the world. But the thing is, it's happening in every commodity. It's not just silver. It's happening in gold and copper and zinc, platinum, palladium. It's incredible that this is what's taken over the price discovery process. It's just a paper game between these idiot technical funds and the sharks on the other side, led by JP Morgan.
You, in your article, and the article is titled "What Disconnect" by Ted Butler, September 28th, you mentioned about these other metals, copper, platinum, palladium, zinc, etc., but you also mentioned that some of them are in fact showing signs of turning around. Can you talk a little bit about whether they are showing what the things to come that may happen for silver and gold as well?
Sure. You don't want to get your hopes up too much, but eventually these idiot technical funds are going to exhaust. There's a limit as to how many contracts they can go short. It's not an infinite number. And they've sold short more than they've ever sold short in history, so we should sense that we're getting close to the termination of the selling. Once this short selling ends by the technical funds, they're not in a position to deliver against these short positions. They're paper traders. They must buy these contracts back. And recently there's been indications in a number of, in all the markets basically, that we might be turning around. And not just because we're up from the low, which is a big part of it, but we're starting to penetrate key moving averages to the upside, which is what these technical funds use to decide the moving average violations, whether they buy or sell. So in a number of commodities, certainly base metals, copper had recently shot up quite a bit through its important 50-day moving average. Platinum and palladium are above their key 50-day moving average, as well as the 200-day moving average in palladium. And we're getting close on gold and silver. We had a rally last week into Friday in silver. We're maybe 10 cents away from hitting the 50-day moving average to the upside. We're about $15 away in gold from hitting the 50-day moving average. We haven't penetrated upward any of these moving averages, these key moving averages in silver and gold, in 3, 4, 5 months. It's a long period of time. You can look at a chart and see what I'm talking about. But eventually we're going to go back up. Mathematically, we have to, at some point, every commodity, every price has to go above and below its moving averages, because the moving averages are merely a function of price. So mathematically, you're going to get violations to the upside and downside. Now, since we've had such an extreme violation to the downside, penetration to the downside of the moving averages in all these commodities over the last several months, we're about due to have a penetration the other way. And when that happens, which is mathematically certain, we don't know the exact timing, but it's mathematically certain that we will violate these moving averages to the upside at some point, you can count that the same technical funds, the idiots that I call them, okay, that sold so aggressively and sold short so aggressively on the downside will be buying just as aggressively to the upside and driving prices higher. At that point, it'll become incumbent upon JP Morgan to go into the market to sell short again if they hope to contain the price rally, particularly in silver. Now, if they don't go short, okay, JP Morgan, and they don't have to, there's no law that requires them to go short. If they don't go short when this certain technical fund buying comes into the market on higher prices, then stand back, because that's the formula for silver exploding in price. I can't say that JP Morgan is for sure going to stand aside. I suspect that they will, but I can't say for certain that they're going to stand aside and not sell short when these technical funds come in to buy. But they got all this physical silver, close to 775 million ounces now. They got a boatload of physical gold, 20 million ounces or so. They're in position, and they have no short position left in silver or gold on the COMEX. It's remarkable. It's the first time ever they got this huge physical position. They got no short position right now. If they just stand aside, put their hands in their pocket, and look the other way when these technical funds come in to buy, prices will explode to the upside. Now, whether that happens or not, it's not up to me or you or anybody else. It's up to JP Morgan, and all we can do is to try and guess what these crooks are going to do. I say they stand aside, but I can't guarantee that. But I can guarantee that if they don't sell short aggressively, JP Morgan, then we will explode, period.
In the short story by Leo Tolstoy, How Much Land Does a Man Need, talks about a guy who tries to outsmart the devil by just taking more and more until it's the death of him. This would seem to be almost like a perfect game that JP Morgan's got going here, as long as they can keep these technical funds chasing after them and a couple steps behind them. So I can see your question of whether and when they might decide the game to quit playing that same game, because it seems like they've been able to accumulate massive amounts of silver and could continue to do so if they chose to. Are you aware of any other driving factors? We've heard speculation that there's official pressure from either government or other sources trying to use JP Morgan as a instrument or a tool to prevent public buying pressure on precious metals, because that is a symbol and a signal to everyone of uncertainty and lack of confidence in the financial condition of the entire country and so on, in the banking edifice. Do you see any evidence of that official collusion or or a motivation behind this particular game that JP Morgan plays rather than just a pure profit play?
I'm inclined to look at it as a pure profit play. I understand this is a widely held opinion, and I'm not interested in offending anybody. People can believe, whatever they want to believe. I don't think it's the government that put JP Morgan up to this. I do admit that lower suppressed gold and silver prices, is probably something that the government or governments in general, would prefer rather than prices going crazy for the obvious reasons, the reasons that you mentioned. I don't know if they're 100% connected. I think not, but we don't operate at levels that we can prove that this is the case or not the case. So look, there has to be some kind of end game to this thing. I think the end game is J.P. Morgan looked ahead, as they were shorting this market, is wash and rinse and repeat cycle that's been evident over the last decade since they took over J.P. Morgan, and even before that, where these technical funds continue to get snookered, pushed into and out of prices. They never seem to make money. Their public record on performance, the technical funds seem to, for the last few years, these guys haven't made any money. Anyway, so I think that's the game rather than being dictated by the government. Besides, I look at the government. I've been watching the government for more than half a century. I don't know if they're capable of doing anything like this. It's like there's nobody that I can point to, and people are free to inform me otherwise, that is, smart enough to have conceived and executed this decades-long, manipulation of metals, of gold and silver. We've had pretty big rallies. We went from $4 or $5 in silver up to $50 in within the last 10, 15 years or so. We went from a few $100s in gold up to $1,900. So the world didn't end, or I didn't sense any big crisis when silver hit $50 in 2011, and when gold later that year hit $1,900. It wasn't a time that I recall that was high, financial crisis or concerns at that particular time. So, why wasn't there a panic then financially when in April of 2011 when silver came close to 50, or August of 2011 when gold hit close to 1,900? I don't. If it goes up again to those numbers and beyond, I don't see in and of itself why that would be a big problem. The average person is not affected throughout the world by gold or silver prices. I think it's a game that's being played by very few players, very few large players, and someone's going to win big, someone's going to lose big, and the average guy in the street, I don't think is going to be particularly impacted by it, unless you own gold or silver. Then you're going to be impacted. You're going to be impacted, I think, very favorably as to those who may be short, and they almost deserve what they get. There's no reason to be short gold or silver at current levels. There's no economic sense in it.
Well, let's take that point just for a moment, just for the sake of completeness. You've laid out a pretty compelling position on why you think that the technicals are kind of being led around by their nose here. But we have heard people speculating about could there be as low as $9 or $10 silver in the future here, and is it possible that, or could you give your argument on why you think that is or isn't likely? I guess your position is that it's not likely, but rather than us assuming that these funds are making a stupid trade, is it possible that some of them actually have reasons of their own to think that that's what's going to happen?
Well, if they have reasons, I'd love to hear them. I mean, I haven't heard any. Can prices go lower? Yeah. I mean, it's like prices can do whatever prices are going to do. It's not. There's no. You can't say it's impossible. It can't go this low or this high. And prices are just numbers. They can go anywhere they want. Looking behind the numbers, however, and looking at why, what would justify or what would explain prices going down. I suppose if the technical funds, added, massive new numbers from here, massive new numbers of short contracts, I mean, they can drive the price lower. I mean, JP Morgan will buy as much as anybody is willing to sell to them. They've already established themselves as the biggest buyers of physical silver and physical gold and paper silver and paper gold over the last few months that anyone in history. And they're not going to run out of money. They'll continue to buy as much as the technical funds or anybody else is willing to sell to them. But since the technical funds are already holding by far record short positions, much higher than they've ever held before, it more stands to reason that there's not much more selling that they're going to do based on the massive amount that they've already sold short. So while I don't think we're going to go much lower in prices in either gold or silver, that's not a guarantee. Certainly we could go lower, but it's not the odds-on bet, and certainly I can't see any reason, any fundamental reason why we would go down. It's not like people are opening up gold or particularly silver mines because they're looking to cash in on all the money that's to be made or anything like that. I mean, it's below the cost of production for a lot of mines. Nobody's getting fat and rich on mining gold or silver right now. So it's not like there's a lot of potential new supply coming into the market. With low prices on the other side of the supply-demand equation, the demand side, low prices, never, curtail demand. Low prices encourage demand. So you got very low prices on a historical basis, on a cost basis for the miners and whatever. So you're not going to see an increase in supply, and you're not going to see a fall off in demand. If you believe in supply demand, which is the basis for our economic system, there's no possible reason that anybody could come up to that would make sense for prices, gold and silver prices, to go much lower than here. The only explanation, as I pointed out in this article, for why prices are lower and conceivably could go lower is if these idiot technical funds keep selling more. That's it. There's no you'll drive yourself batty if you try and come up with fundamental supply demand reasons as to why silver and gold should go lower or even stay at current prices. You save your time. You're gonna go nuts if you're gonna try and figure out another reason other than the nitwit technical funds selling and JP Morgan buying, and at the same time tricking those technical funds into selling. That's the game.
We certainly had seen in recent months quite a drop in investment purchases from the U.S. Mint of like the U.S. Silver Eagles, which had been sold out in record numbers in previous, go back a year or a year and a half, and the Mint was selling out in the record numbers every month after month. And just in this summer, in late spring and early summer, were really low. So sometimes there can be a momentum loss or boredom effect that sets in when people get distracted. And I'm wondering how culturally spread this momentum trading, like you mentioned, these technical funds, if the mindset of the populace is become so much that in our connected world, rather than maybe if you go back 40 or 50 years when few people invested, but those who did so with a more strategic viewpoint, whereas now it seems like with everybody having their cell phones and watching whatever Amazon and Apple are doing today or something, if the whole herd has basically become more conditioned to, gee, there's no action here, let's go look somewhere else, because there certainly seemed to be a drop-off in retail purchases of Silver Eagles in the last several months. Is that not true?
A lot of what you're saying is true. I don't think people collectively, investors and people in general collectively, are much smarter or dumber, today than they were at previous times in history. Leaving out the technical funds, we haven't had this paper setting of prices today that didn't exist in the past, admittedly. But people are people. It's understandable that people collectively don't buy any assets that are not going up in price. People throughout history, the ages, are only interested in buying things that are going up. Stocks have been going up, real estate have been going up, bonds have been going up because interest rates were going down. And that's what's attracted people to buy collectively. There's a madness in the crowd, psychology, and yes, there's been no overall, collective buying of gold and silver because the prices have been going down. There has been collective buying and selling in stocks and bonds and real estate and cryptocurrencies and marijuana stocks and whatever. Anything that goes up, people are going to buy. That's just one of God's laws. That's the nature's law. Because gold and silver haven't been going up, people haven't been buying them. But gold and silver will go up someday. You can't pin the day, but will go up. And people will buy them again. People are people. They're not. That doesn't really change. The remarkable thing in gold and silver is that when you look beneath the surface as to why they haven't been going up in price, therefore preventing collective investment interest in them, you get back to this technical fund COMEX paper game that I talk about incessantly.
And it sounds like you've looked at the internals of that long enough to really give us some insight that the ordinary person does not have. What you're describing in general about the herd mentality leads to the adage about always go against the herd and be a contrarian investor and buy things when they're completely out of favor, when everybody hates them, and sell things when everybody loves it, when the cab driver and the haircutter are giving you investment advice. That's the time to get out, that kind of thing. So. In combination with that, though, you're saying, hey, not only, guys, is this a field where everybody's neglecting it, but look what the big boys are doing and follow the money and see what the big players, in this case the biggest fish in the pond, JP Morgan, is doing. So that's a special time of interest, opportunity, it sounds like, to be a contrarian, to be a small-time contrarian, but following the lead of the biggest contrarians that are doing this very low profile.
That's a pretty good description of it. I mean, I don't think I can improve on it.
I've got another follow-up for you. You mentioned way back in the beginning talking about the CFTC, and in your article you spent like the first half of your article saying, where are the regulators? Where are the enforcement? Why are they just turning a blind eye on us? And can you talk to us about what evidence we have? We've certainly had Bill Murphy on from the Gold Antitrust Action Committee, GATA.org, but it's been a while, and if you could update us on what are we seeing as far as, I won't call it coordinated, but coincidentally, simultaneous lack of attention by regulators and government in the face of this type of what appears to be market manipulation.
Well, the crazy thing about it is it's the agency itself, the CFTC, that's putting out the data in these reports that are publicly available, the commitment of traders, the bank participation reports, that I base my contention of manipulation and the mechanics of what's going on in the market. And I'm pointing out openly, that this is what's taking place. Certainly nobody that I've heard has come up with a better reason to explain price movements than through this positioning, this paper positioning on the futures exchange. But what the remarkable thing is that there's nothing but silence on the other end.
Mm-hmm.
If what I'm proposing is so silly and crackpot and just unreasonable, you would think somebody would be able to come along, okay, and legitimately and logically refute and rebut what I'm saying, and that's, I'm not getting that. I mean, I'm not getting anybody coming along. Oh, I get people telling me, "Oh, you're full of junk, okay, and you're wrong and you're crazy," but they're not sitting there with a clear explanation of why it is that I'm wrong. I'm giving you numbers, what J.P. Morgan has been buying. You can back this up by going to the Commitment of Traders report and seeing if they did buy 200 million ounces of paper silver since June on the way down, okay, 40,000 net contracts. I can show it to you in the Commitment of Traders report. I can show it to the CFTC. They're the ones that are publishing it. They did it on a $3 drop in price. How is that possible? That's a legitimate point. That's a point that if I'm wrong, I should get the Boston cream pie just mushed in my face and shown where I'm wrong, okay? But I'm not getting that. I'm getting silence. I'm going to the Commodity Commission and telling them that there's a manipulation going on based on your own data, and this is, what do you say about it? And they say nothing. I'm not raising, I know I'm not raising silly concerns or things that don't really matter. At the same time, I'm not, basically hiding the fact that I think J.P. Morgan is the biggest crook in the world, and I say it openly in my articles. I'm saying it openly here. Why aren't they coming back and saying, you can't say that. You can't. We're not crooks. You're wrong. But they're silent too, and that's something that you nor anybody else has ever seen. You can't go out and call a big bank, especially one as powerful as J.P. Morgan, as crooked as a June day is long, okay, and get away with it without them saying it. Yet I'm doing it, and you're asking me, why, how this can be, and I'm saying they can't answer. So the best course for them is to keep their mouths shut and just do what they're doing and hope not enough people don't notice it. Because, look, I'm putting myself in harm's way. What I'm saying would be, held as a libel or slander, okay, in a court of law, if what I was saying was wrong. It's not wrong. It's like I'm waiting for the other answer. I'm sick of waiting for this to be resolved. So in the meantime, I'm trying to accelerate the timetable by doing things that normally regular people wouldn't do. You wouldn't go out normally and call openly J.P. Morgan crooked unless you had damn good reason.
Right.
And that's the case. At least you wouldn't be using your real name, and I can assure you I'm using my real name.
We've been speaking with Ted Butler, the founder of Butler Research. Ted, this has been one of the most actively engaging interviews that I've heard in a while on what's really going on behind the scenes in the precious metals markets. I'm sure it's going to be widely followed by our subscribers and other sites that will repost it. We're just grateful. I'll express on behalf, that's one of the roles I get to be, is kind of the role of every man here. So I'll express on behalf of all of our viewers our deep gratitude and our thanks to you for your courage and your sharp mind that you've applied to this very important topic that's going on in our time that's going to affect a lot of people. So we really appreciate that, and we'll follow along with you and hope to have you back again soon to find out whether this wash, rinse, and repeat cycle is going to be, how long JP Morgan's going to keep doing that. But even if they do it for another while, that was what just occurred to me, even if, let's just say that the cycle continues for a while, it gets back to that discussion about following the money and doing what the big boys who know the most are doing. As a small-time retail investor or someone trying to protect what's yours, it sounds like there's some prudent course there is to just go ahead and follow their lead, even if you don't know the exact timeline, because eventually you're going to be right.
Well, it'll certainly be interesting enough to keep following, and I thank you for the opportunity of being heard.
Well, thank you, Ted, and we look forward to our opportunity to have you back again here on Reluctant Preppers.
Okay, have a good day, John.